Well, hello again. It's great to have you guys again for our Q&A. Hopefully you guys got a lot out of the module. I wanted to give you a little bit of a heads up, and hopefully this will be an additional benefit to you. What we have decided to do beyond just presenting deals is, and I would say within the next 24 hours, if not in the next few moments, we're going to have an actual form placed into the private money wholesalers members area where you will be able to fill out the form, and that will be the way that you can submit your deals. That way there's a standard, there's a process. You can still use if you're one of the fast action takers, you can still use the format for the Steal Our Deals template. However, for submitting this to the Rolodex, you can use our form, and that will that'll have one standard way of doing it. So you'll understand exactly what to do. Also, you'll still want to put the executive summary in the place of the form that requires it, but it will give you more of a standardized approach to that, and we thought that would help you as the students. So, that being said, we've had a wonderful time. I've gotten a number of questions again, and so we'll start with those, and we'll see if anybody out there has some questions as well, and we'll try and make sure we answer them all. And by all means, keep the questions coming, because they show me that you guys are definitely working on this, that you are definitely excited about making this happen. We've got some deals in the pipeline already. I believe we've got a couple of term sheets back, so I'm excited to see the success that's happening. We just need to get a few more going, and I want to see some testimonials coming. So let's go ahead and start with some of the questions. Number one, let's see. We had one of the students that asked about licensing again, and the question was in regards to licensing, if this is absolutely necessary. Now, to start off with, we are going to have in one of our modules, I'd say probably in the next 2 or 3 weeks, we're going to actually have an SEC attorney on the module with us, going over the legalities and the very specifics of how to do this. That being said, there's a number of ways that you can skin the cat, so to speak. You can, we're not, first of all, getting paid for raising the money. We're getting paid for our consulting service or our marketing service, or we can do our processing service through an existing mortgage broker, and you can do it as a loan processor under them. So there's a few ways that you can do that. That being said, of course, if you do have a license, by no means does it hurt. And I would never say that you don't want to have one, or that you don't pursue higher education in what you're doing. It can only benefit. But as far as that's concerned, you can do it as a consultant, and you can do it as a marketer, as a marketing agreement. You will actually see in the members area, and it should already be up at this point, but there's a template for an actual marketing/consulting agreement that's already been used, and it'll give you a good starting point. To do that. And then, of course, especially in the starting out process, I want to make sure that you do understand how to do it, and I want to make sure that you'll be covered in what you do. So if you like, before you send out a form, you can send in a copy of what you're proposing to your client, and we can at least review it and give you some pointers on what ways that you can adjust it for yourself. And so we'll do that on a case-by-case basis for you, and there should be no problem with that. We will have additional forms that you can just use as templates. We are having the attorney review them to make sure that they cover not just my area but yours as well, all over the country. So we want to make sure that you are completely covered. We should have them by the end of the week in the members area. So hopefully that answers that question. Again, I will try and see if the people that are asking the question are on the line, and if they are, I will go ahead and open the line for you so you can ask the question as well. Mike Jones, let's see if you're on the line. Mike, you are here. In fact, it looks like you've asked a question here as well. But Mike, are you available?
Yes, sir, I am.
Mike, how are you?
I'm doing well. How about you?
I'm having a blast here. Having a blast. Hopefully, by the way, you've been getting a lot out of the modules, and they've been educational for you.
Yes, sir. Very much so.
Excellent, excellent. So you had a question about notes, and you might have more than one. So let me go ahead and have you ask your question right off the bat.
Okay. I was wondering if any of the investors are interested in purchasing any notes. Through some of my marketing, I've actually been contacted by an individual who is looking to sell a note that has a very good loan-to-value ratio, and he's willing to restructure it to where he's making payments at 10% interest. I don't know if you knew of any investors that were...
Absolutely. Those are just as good. Purchasing notes can be just as valuable as just doing a straight loan origination for a private lender. So most private lenders, actually, that do the loan origination themselves would be just as happy buying a note. It's just got to make sense. Now, the only thing I would say in regards to that is that if the value or the loan amount is less than what they're used to, then probably the best thing to do is see if it can be bought at a discount. And if it can be bought at a discount, that's what's going to increase their yield, and that's what's going to make it attractive for them. So, like, for example, give me the example of the loan that you're talking about, and we can see if it actually applies. Okay.
It was a friend who had financed another friend's property for $57,000. The property appraised for $105,000 in March of this year. It has been it's been completely rehabbed and it's being rented right now. And it was completed. The rehab was completed when it was appraised. But the way they had it structured was that there was no payments on it that were being made. And I've spoken with the gentleman, and he's willing to restructure the note or redo a note, however we need to do it, in order to make payments at the 10% interest. And he's looking at like a 2-year balloon. That's the one thing that kind of that I was kind of curious about as far as the time frame. I know some folks buy notes and they let them completely season out. But 2 years is kind of beyond what most private investors are looking for. So that was one of the things I was curious about. But
actually, many, and to answer your question, many private lenders have no problem 2 years, 3 years, 5 years, 7 years. In fact, the average private lender, not broker and not hard money, has no problem going 3 to 5 to 7 years because they don't care about rolling their money over. It's the brokers that care.
Okay.
And so it's the brokers that are really the ones that have been driving the shorter term loans. Private lenders couldn't care less as long as the money's working for them. In fact, because most private lenders don't charge points, their only incentive is to get the money reworking again. If it's out there, they don't care. They don't mind as it's staying out there 20 years, as long as it's being paid, as long as the money's working. So the 2 years is not a problem. Even if it needed to be longer, it wouldn't necessarily be a problem. Now, how old is the note?
The note itself was originated in March of 2010. So it's a little over a year old, but like I said, the way it was structured is there were no payments being made, and if I'm not mistaken, I believe seasoning doesn't start until payments start.
Exactly, and that's what I was about to say. Since this is a unique loan structure because it's over a year old, which would normally be great. Understand why note buying is so valuable and so appreciated by private lenders is because private lenders, the scariest moment for them, the scariest moment for a bank, the scariest moment for anyone that does a loan is the first month after they have done their loan. And the reason why it's the scariest is because they don't know if they're ever going to get their first payment. By the way, this is also why refinances are so much easier to do than purchases. The reason is if you've been paying on a property and paying on a note for 3 months, 6 months, 12 months, or more, then chances are you're going to continue to pay. And so it's a safer bet. And so that's why private lenders like it. However, because this one has not started payments, there's really no seasoning. So the secret for this one would be a discount at the beginning, so that even if they don't get payment number one, they're already in a profit. So my question to you, it's structured on $57,000, and it's a good LTV. We do realize that right now. However, if they were paid off tomorrow, they would have made zero. So it's, or they would have only made those few days interest. So they'd like to see, in a situation like this especially, they'd like to see some kind of discount so they walk into a profit. So let me ask you this. What would the owner of the note be willing to take?
At this moment, he's kind of stuck on 57.
Okay, so he wants full price.
Yeah, he wants full face value for the note.
Okay.
I don't like I say. I mean, with the seasoning issue, that was one of my big issues. I don't know if it would be something that the guys that are currently in your network would be interested in.
Possibly. I mean, it's no possible. The thing would be deal structuring, and here's the things that would make for a better option to make it more attractive. First, obviously, if there could be a discount, that would be ideal. But if it's not, okay, the next step would be to make sure it's structured so that the private lender is guaranteed some kind of a profit. So maybe a prepayment penalty. If it's paid off within blank amount, within 6 months, then they would owe the entire 6 months interest, which, by the way, is the same type of prepayment penalty that banks do. So at least they'd be guaranteed 6 months interest. That might be something that would be willing to do. Of course, that 10% is going to be big. Now, one of the positives is the guy bought the property and then actually did the work to the property. Is that correct?
Yes, sir.
Okay. So he does have skin in the game. He actually he used his own money, I assume, to fix the property up.
Yes, sir.
Okay.
And currently the property is rented and is generating an income.
Okay, so these are all points that actually could work in the lender's favor. If it can be structured to have maybe a prepayment penalty so that the lender is guaranteed at least 6 months interest and such, if we can prove the value so that we know that the loan to value is strong, and you know, if we can maybe bump it just so that we know that we'll get the most bang for the buck for the private lender to maybe 12% interest only instead of 10, and just so you know, and this is in lieu of the discount. 12% is actually not much more. This is on $55,000. 10% would be roughly about $500. No, it'd be about $450, whereas give or take, and 12% would be $550 on this. So it wouldn't be a huge jump for him. And most people, when they think of say a $55 or a $57,000 note, $570 is what they're thinking they'll have to pay. Well, that's 12% interest only.
Yeah.
So see if you can go back to them on those things. Now, because this is a refinance, it shouldn't be. You don't need contracts in this situation when you submit it. So, you know, if they're willing to structure it so that there's a guaranteed profit to the private lender, I don't actually see too much of a problem on this deal. It'd be even sweeter. It'd be even sweeter if you could, and you could actually make some more money, just so you know, if you were able to negotiate a discount. For example, and I'll tell you how this could make you money, and guys, this could really be used as a strategy that you can use as well in this business. If you see a note that comes your way into the pipeline as a private money wholesaler, and you'll see this more often than you realize. And let's say we have a scenario where the owner financer is looking for cash, and it's a first mortgage on a $100,000 house, and it's a first mortgage of, say, 65, just for round number's sake. Well, we know that the lender is not going to have any problem lending that 65%. But if you can get the seller of the note to discount to 55, you can actually do basically, you could broker the note is what they call it, but you could actually do a similar to a wholesale property where you take the contract on that note for 55 and you sell that note as the holder of the contract on it to the private lender for the 65, and you could actually make a $10,000 profit, or even 60, and make a $5,000 profit. So there's ways to make a spread on a transaction, on a note purchase transaction, which you could get paid twice in that situation. For example, as a consultant and on a spread. Though, in this case, I would probably say that I'd just go for the spread if you could get that kind of a spread on it. Yeah. So just an additional way to make some money. Does that sound good to you?
Yes, sir, it does. If you have a moment, I had one other question that I had submitted that if you had a moment, you could answer now, if you would.
I would.
All right, perfect. I kind of missed the point you were making about the consulting agreement that you had the download for in the members area. Is that something that we send into the prospective lender along with the request for funding package?
When you, most of the time, you're actually going to get paid by the borrower, by the prospective client, which is the borrower.
Yes, sir.
And so you're going to have a fee agreement or a agreement on how to get paid. And so what I've provided in the members area is one example of a fee agreement that has been done already.
Okay.
And this was a specific fee agreement actually for a business, but it could have very well have been a real estate transaction or anything else. That being said, we are going to have fee agreements. We're going to have consulting agreements, marketing agreements, partnership agreements, and broker processing agreements in the members area. Hopefully by Friday. However, I'd say by the beginning of next week at the very latest.
Okay.
So, but what we put in there was a template that you could use, because this was an actual fee agreement that was used probably in the last month or so, I'd say. And so it's something that you could use as a template for a marketing agreement with a potential client. But the reason that's there is so that you can collect a fee at closing, or however you structure it. There are some people, because I know there's a question that's coming up. In fact, I'll read the question in just a second here. Let me see if I can pull it up. Well, there was a question that came up, and I'll see if I can find it. But the question was, at what point do we collect the fee agreement, or collect the fee? And that's really up to you, and it goes more based on your experience level as to when you collect it. For example, for me to work with someone, I collect an engagement fee up front. This gets rid of a lot of the looky-loos, or a lot of the people that are trying to basically trying to just get access to my time and not pay for it. Well, we go ahead and we charge an engagement fee up front. This gets me to the serious people right off the bat. Now, does it lose me some clients? Probably, but for me that's okay, because I've got more than enough on my table to handle that. But at the beginning especially, I would not recommend charging an engagement fee up front, because you have not gotten to that point where you know that you can make a proposal correctly, or you've gotten to the point where you feel comfortable that you're going to be able to do it. And that's more the issue than anything else. You can also charge that fee. For example, you can make your agreement up when you get a term sheet. You could actually charge the money right then, and that's okay as far as I'm concerned. You could also get paid at closing. So there are 3 different places that I see that you can get paid for your services as a marketer or as a consultant, either at the beginning or a portion at the beginning. Then you could get it at the time when you actually receive the term sheet from the private lender, or you could actually get added to the HUD. So whichever way you feel more comfortable with, that would be the options. How's that for you?
That sounds great. That sounds great. I like that.
And like I said, you will be getting the forms in the members area. I would say, like I said, as early as tomorrow, and no later than the first couple of days of the week.
Okay, perfect.
All right. Well, Mike, thank you so much. Did you have any other questions?
No, sir. I thank you very, very much. You've been very informative.
Okay, great, great. I see there's actually a few other questions popping up, so let me see if I can open up. Let's see. We've got. Okay, Tom. Tom has a question in regards to valuation. Tom, are you on the phone so that I could actually open the line up for you? It looks like you're on microphone and speaker, so I don't know if you'll be able to be heard. I'll try it. Tom, are you there? No, it doesn't sound like it. If you have a question, of course, you're typing them in, and that's great. But if you can call in using the phone number, that'll actually allow it so I can unmute you and you can ask the question yourself. But in the meantime, I'll go ahead and read your question. But if you want further clarification, I will need you to either type in more or go ahead and put yourself through the phone line so that I can unmute you. Okay, so the question that Tom asked was, would you please comment on why you place value on tax assessed value as part of your value verification process? Historically, in my area, the tax values have been way below real value. I don't know if this is true in other areas. And that's a great question, and that's true, by the way. If you have the opportunity to be conservative, you should be. And that's one of the reasons why tax value is so looked at as far as valuation, because this is the government. And of course, no, I'm not trying to add credibility to the government, because we know that's government intelligence. That's an oxymoron, isn't it? But in regards to tax values, the main reason why I use it as a strong point, as a strong value indicator, is because a lot of the private lenders do as well. A lot of private lenders, they couldn't care less about an appraisal. They couldn't care less because, well, let's be honest, that's one of the reasons that this market is in the situation that it is. And that's because people were fudging appraisals and actually doing downright fraud in their valuation process. And so people have gotten a bad taste in their mouth. Private lenders, a lot of times, have gotten a bad taste in their mouth concerning appraisals. And so what we're trying to do is we're trying to give them something that they can hang their hat on. And as far as a way to do that, if you can provide them, and keep in mind, when I'm talking about tax values or Zillow or Trulia or Cyber Homes or any of the other value indicators, we have to give them some kind of supporting factors to what we feel is a good deal. And so if tax assessment, and this happens, this does happen on many occasions, but if the tax assessment doesn't support what the real value is, for example, if there's a house and you know that the market value is $100,000, however, the homeowner has owned it for over 20 years, and as a result, the values haven't gone up, on the tax values on purpose because of homestead and the limits on caps for property values for homestead, so that the taxes aren't going to be higher. Well, then we don't include it because it's not a supporting factor of real value. And that's why we're going to go to other things. For example, Zillow, Trulia, Cyber Homes. And if you can pull up your own comps that prove value, by all means include them. The reason why I give these others is so that anyone can provide proof of value or supporting factors. Not everybody has access to the MLS. Not everybody has access to an appraiser to do a pencil search or has the ability to pull comps. So what I'm giving you are factors that you can use in order to get to be able to provide a support for what you're saying that the value is worth. Tax assessment is one of the best ones if it's available and if it fits. But if it doesn't apply, well, then don't include it. But if it does, that's even stronger to the value. That really gives a warm and fuzzy feeling to the private lenders, knowing that the tax value supports it. And there are some private lenders that actually will not go off of anything else. So you might as well see if that can fit. Hopefully that answers your question, Tom, in regards to that. Okay, Rivington asked a question, and I see you're on the line, Rivington, so let me see if I can open the line to you. Okay. And I see you're on, but I can't unmute you. I guess you're, oh, there you are. Rivington, are you there? Rivington, going once, going twice. I see you're on speaker and microphone now. So, all right, I'll read your question, but if you can get on, I'll be more than happy to add you back onto the call. So one of the questions that Rivington has is, okay, I have, hi, I'm Riv from Georgia. I submitted a deal, but have not got the contract accepted yet. What should I do once it gets accepted? Resubmit? Yes. I definitely want you to resubmit it once the contract is in place. The reason why it's necessary to have a contract, and I know a lot of people would like to be able to submit deals just on letter of intent or anything else like that. The reason why, and it's in your favor, to make sure that the contract's in place. If you're just going off of best case scenario, which is exactly what letters of intent are, or options, as far as when somebody says, you know, I'm sure I could get it for $50,000 and it's worth $150,000. Well, that's a best case scenario. And if we present the deal that way to the private lender, then the private lender's mind is going to be stuck on that $50,000. However, if the deal comes back and the seller says, no, we won't take less than 65, well, now going back to that lender and saying, well, we sold you on the deal at 50, but now we got to come back and bring it back to you at 65, guess what you're going to have? You're going to have a ticked off private lender, and you're probably not going to have him do the deal. So it's best to get it done right the first time, and that's why we're requiring that you have a contract in place when you submit a deal. That being said, once you have that deal, Riv, go ahead and resubmit it, and we'll try and get it out to them as soon as possible. Lee, are you on the line? I see you have a question. And I'd like to actually go ahead and you have a deal, I believe, in the pipeline. And I'd like to actually go over it with you if you got the time. So if you wanna call in on the phone, I'll see if I can get you on the line for that. While we're waiting for that, I will go ahead and see what Judy has to say. Judy has a question. Okay, Judy, let me see if you're available. Judy, you're also on mic and speaker, so I'll go ahead and I will read your question. But if you want further clarification, just switch over to phone, and I can unmute you so you can be heard. But your question was, Judy asks, will the lenders loan money for short term, say 90 days, 6 months, or 1 year, similar to hard money brokers for people to fix and flip? And the answer is yes. Private lenders, including the lenders in our database and our Rolodex, many of them, not all of them, but many of them will lend on the after repair value. Some of them will still lend on the current value, however, and will want you to put up the escrow money. Some of them will provide that escrow money based on the ARV, but will require that the money be in escrow. Now, when that money is in escrow, some of them will release one draw up front, so you have money to work with, or there's some that will say, you go ahead and start the work. When you're ready for a draw, once you've done a certain part of the work, we'll release the money to replace it, and then so you're working off of some of your own money. And personally, I like that way myself. However, private lenders are negotiable, and so there are times they'll release money up front. There are some lenders, once you've built relationship, especially once you've built relationship, that will just release the money so you can do the work and you don't have to worry about draws. But that would not be on a first deal, very likely. Understand, anytime you're working with a private lender, the first deal is always going to be the hardest, for the same reason as we talked about with a purchase versus a refinance. The scariest moment that any lender is going to have when dealing with a new person is that first month after they've done a loan. They don't know if you're going to ever make your first payment. They don't know if you're ever going to do what you say you're going to do. And so that first deal is always the hardest. So put your best foot forward. Make sure that you give them a real good deal right off the bat, and chances are you'll have a lender for life if you do right by them. What I do, and this is me as a real estate investor, just to give you a scenario that'll really make them happy, and it'll set you apart from so many other people. And that is, at closing, if you can work out a scenario, maybe it's out of pocket, maybe it's been worked into the deal, but at closing, if you can actually hand them a check at closing for the first month, so you're actually ahead, they will be amazed, first of all, but they will be so blown away by your credibility that they won't be able to wait to do the next deal with you. So it's a relatively cheap thing to do, but if you can include the first payment at closing, it will make such a difference in credibility, and it'll definitely make it so the private lender really wants to work with you again and again. That being said, short term is not a problem. 90 days is not a problem. 6 months is not a problem. 12 months is not a problem. For the shorter term loans, you have to realize they're probably going to want a little higher interest. And the reason is because they're going to get their money back quick. They're not going to get as much money as if they were going 6 months or 12 months. So just keep that in mind, but there shouldn't be any problem doing 90 days, even 30 days, which I've done. In fact, I just completed a loan a couple of days ago that was 90-day money. And so there was no problem with that. Hopefully that answers your question. And if not, please call in and I will try and answer it for you. Okay, a question from, let's see who this is. Judy again. Judy has a question which is, will the lenders loan me to buy defaulted notes from banks? My exit strategy may be to renegotiate with the seller for a long-term loan with the lender, or foreclose and hold the property. Might be apartment buildings or motels. And yes, I have done those. So the answer is yes, you can absolutely buy defaulted notes. At that point, you really are looking at discounts, and you are really going to have to look at LTVs. Because in this situation, the lender already knows that he's coming into a position where the loan's already in default, where the loan is already not paid. And so to do something like that is going to absolutely require a good enough loan to value or a good enough discount that it will be well worth his time. I'll give you an example of how this can be a very valuable way of doing it. And that would be if you can actually negotiate to get your hand on the deed at the same time as you are negotiating the note. If you can get the seller or the person that's in default to sign over a quick claim or a deed in lieu or something along those lines, now what you are doing by buying the note is simply taking over the property, and so that financing is actually more of a purchase finance, even though it's buying the note, and actually saves money in that way of closing, because title would still apply to that note. The title insurance would apply, and there'd be a lot of different benefits to that type of closing, especially in closing costs as far as that's concerned. But when you do it, just know that you're going to have to do a very large discount to make it work. Hopefully that answers your question. Again, if it doesn't, by all means, call in and I'll try and answer it for you specifically. Let's see. We have another question. And yes, by the way, note purchasing, sometimes for apartments and motels, phenomenal strategy. Karen has a great question. I love this question. I'll already tell you the answer is yes, but I'm going to go ahead and see if you're available. Look at that. You're on the phone. I'm going to open the line up. Karen, how are you?
I'm great. How about you, David?
I am having a blast.
Great.
It's nice to talk to a live person.
Yes, it is.
So, Karen, you asked a question about lines of credit with private lenders. Go ahead and give it to me the way that you want it answered.
Are any of the lenders interested in doing line of credit loans with real estate collateral?
The answer is some are, yes. The answer is yes. Now, like I said, next week we're going to go into resources that are in your area as well. And I'm going to give you a strategy right now that can apply towards what we're talking about. We had one of our clients that was doing deals in Louisiana after Hurricane Katrina, and so we were raising money for him. And the way that it was set up was we had buy-ins. That's what we called it. But let me clarify. What would happen is the individual would bring a minimum of $250,000 and would hold the money in escrow at the attorney's office, and it was held in escrow with the escrow instructions that in order to access the money, they would have to provide an appraisal, and that they could, and a title commitment, and they could borrow up to 70% of the after repaired value in order to buy it, fix it up, and then resell it. Now, when that money was used up, or when the property was sold, the money would go right back into the escrow account, and it could be used over and over. So the money was there, and he continued to pay, I believe it was 8 or 9% on the money, whether he used it or not. Now, this was the way that we structured this particular deal, because we knew that he was going to be working on doing these deals, and he was going to continue to use the money. We ended up with, I believe it was 10 or 15 people that did it with a $250,000 minimum, and he was able to do, well, let's just put it this way. He bought and sold over 684 properties in the New Orleans and Slidell parishes over a 24-month period. And so the answer is yes. You can do all sorts of creative structuring, like lines of credit or other things like that. The way that I structure it is the way I just mentioned to you, where I tell them I will pay them on the money whether I use it or not. I'd rather have a lower interest rate because it's going to continue to be paid, and we'll have the money set aside in escrow so that when a deal comes, all we have to do is follow the guidelines of the escrow instructions so that we can access the money. So to answer your question, it is completely doable. Again, that's a relationship type of deal.
Right,
so
after perhaps some other
exactly
property had been.
Yep, exactly. Okay. The best thing to do is give them what I call a vanilla deal right off the bat. Just a standard, really good, really tasty deal that they can say, wow, this person does what they say they can do. And from that point on, you got a lender for life, and they'll follow you. Remember, some of the rules that I've given about private lenders like to stay in their own area, like to only do specific types of deals or this or that. Well, all that goes out the window when it comes to relationship. Once you've built a relationship with a private lender, they will follow you to Alaska. They will follow you to Louisiana. They'll follow you to California. They'll do single-family, multifamily, motels, note purchases, lines of credit, defaulted notes, whatever, just to work with you. Everything becomes negotiable based on that relationship. So get that first one out of the way, and then the sky's the limit.
Okay, great. Thank you very much for that information.
Oh, no problem. No problem. By the way, just to give you that example, an example of how the sky can be the limit, I've actually had several of them give me unsecured lines of credit.
Wow, okay. After the relationships have been built.
After the relationship is built. That's the key.
Okay.
That's the key, though.
Terrific.
Okay. Was there any other question I could answer for you?
No, not at the present time, but something may come up as you keep going on during the day.
By all means. I'll be more than happy to come back to you. Okay. All right. So let me see if there was, I know there's more questions coming up. Okay. Can you walk through an example of how to get paid? Say a $300,000 loan for a property worth $500,000 after repair value. Okay. This would be James. James, let me see if you're on the line. James, I see you there, but I also see you're on microphone. So what I'm going to need you to do, because I know this one will need a little bit more clarification and such, but let's go ahead and talk about it. You said, can I get an example? So what would happen is I would get called on this particular deal. And this is not a small single family home. This is probably either a larger sized home, or more likely it's going to be a commercial type property. Well, in this situation, when I would talk to the individual, I would tell him what I do, which is, as a private money wholesaler, we assist individuals in building a private money resource for their individual property, or we would assist them in building a database of private lenders so that they could go back to their database over and over. Now, most of the time they'll want to do the one deal. And so in that situation, I would tell them, I would ask them to explain the deal to me, tell me about it, send me a proposal. Once I reviewed the proposal, I would go ahead and I would tell them what my engagement fee is. In a deal like that, I would probably charge a minimum of $5,000. And so in that situation, I would, let's say that they agreed to it. And by the way, one of the things that adds to that credibility is testimonials. One of the reasons I'm able to charge the engagement fee up front is because I've closed deals and continue to close deals. And therefore, I have testimonials and referrals that people can actually call and verify that I've closed deals. And by the way, it's a matter of public record. So all I have to do is tell them a specific property. They'll be able to look. They'll see it is, and they know that I actually fund deals. At this point, there's no argument as to the fact that I am effective. It's now just a matter of if they are willing or able to come up with the money. And as I've said this before, I don't like working with broken investors, so I go ahead and require that up front. If they can't come up with it, well, the chances are it's going to be a little scary as to whether they'll be able to come up with payments for the private lender, whether they're going to be able to come up with the repair money or whatever it is that, to make sure that the deal works. And so it is a little bit of a disqualifier. But let's say that they pay them the money. I also tell them that I generally charge 10% of whatever my marketing or my marketing raises, and that would be, of course, subtracting the engagement fee that they've already given me. Now, that is for a straight cash payment. I would also be open, if it's a deal that I like, I'd be open to doing 5% of what the marketing raises, and then the balance in equity in the deal. Say 5%, 10%, even up to 50% of the deal. So for a situation like that, and guys, I know your eyes are just bugging out at this point because you're saying, wow, that's a lot of money that you could make over one deal, and that's a lot of money. Are you serious that these people will pay it? And the answer is yes. People are paying this to me all the time because the money is key. The deals are everywhere. Like I said before, it's hard to get me super excited about a deal because that once-in-a-lifetime deal that comes in, well, they come in every week. I had a gentleman that called me and said, in fact, this week, called me and said, you know, we have a different scenario. We have a different structure on how we do things. And I didn't say it mean, and I made sure I clarified. I don't mean to say this in a mean way or anything like that, because I believe you when you say that. However, I hear that every week. I hear that at least 2 or 3 times a week. And so my guidelines stay the same. If you are able to pay the money to work with me, then we'll do it. If not, I'll be happy to work with you when you can. And that's the way that goes. Let's go back to where what I say. I tell them I charge 10% of whatever the marketing raises, or I might be willing to look at a partnership scenario where I'll charge up to 5% of whatever the marketing raises, and then the rest in equity, up to 50%. And if that is a really, really good deal, then I will skip the money other than the engagement fee and just go for an equity stake. That's also an option too. But those have to be really, really sweet deals with most likely continuity, like say a mobile home park or an apartment complex or a commercial strip center or something like that. Something that I know is going to make me a lot of money over the long run, then I'd be willing to work with that. So once that fee is agreed on, and once that's all set up, I give them my marketing agreement or consulting agreement, which is then geared specifically to that deal and specifically to that client. And by the way, another benefit that I offer them is whatever my marketing strategy will become their proprietary information, so they can use it themselves if they want to use it to raise money. Most of the time, they'll come back to me anyways because I was effective the first time. But if they want to, they can use that information that I made as far as the proposal or the marketing plan that I put into action. They can have access to it, and they'll have it from that point on. So that's additional value that they're getting. They're getting the consulting, they're getting the marketing, they get to keep the marketing after I'm done. And so they're actually getting services, they're also getting goods. That's how they're getting paid, or that's what they're getting paid for. Or sorry, that's what I'm getting paid for. Sorry about that. So once I've received the engagement fee and they've signed my agreement, I now take the deal, I make the proposal, I submit it to the private lenders that I know. I also research private lenders in that area. I get a term sheet. I turn it in, because at this point, I've received my engagement fee. I'm not going to get paid again until closing, as far as I'm concerned. So at that point, I submit everything, the term sheet, the marketing fee agreement, and turn that all in to the title company or closing attorney, sit back, let it close, and expect a wire or a check in my account within 24 to 48 hours of closing. And that would come straight from the title company or the closing attorney. Hopefully that answers your question as to how that would work. James, hopefully that did. Let me see if you ever came back on the line. No? If you'll just text me and let me know if there's any follow-up questions that you want to have answered in regards to that. Okay, Judy, yes, you did have some questions. So while we're going through the others, I will pull up your questions and we will definitely address them. In the meantime, okay, Murray, you have headphones hooked up. Does that have the mic? If it does, we can try it. Murray, let me go ahead and see if you're available. All right, it's not giving me the option to unmute you, but we can try it. I mean, if you switch back over to microphone speakers, because what it has you switched on in the audio is telephone right now. So if you'll switch it to microphone speakers, I can try and unmute you. Okay, Lee has a question. Where do we find the tax value of the property? What you can do is you can go to the property assessor site in that area, and I'll give you a tool, and we're going to be adding, this is another tool that we're going to be adding. In fact, Tim is setting this up as we speak, and it should be in there in the next day or so. But you will, in the private money wholesaler members area, there's going to be access to all the sites for all the counties in all the states in the country. Now, if they are online, you'll have access to them right in the portal in the private money wholesaler site. In the meantime, if you go to NetR online, N-E-T, the letter R, online.com, you can actually go there, and that is another portal site. If you go into public records online, you can look up all the counties in all the states, and it'll allow you to do it. Or else you can go, like I said, straight into the into the private money wholesaler members area, and you'll have access to it right there. But you'll go to the property assessor site in your county or the county that the property's in, and hopefully they will give you the address. There's usually an option to look up a property by address, but if it's not, if you can find out who the owner's name is, you'll be able to look it up by owner name too. And when you go on to the site for the property, you'll be able to get the tax assessed value right on the information log. So it's actually very simple. What we can do, in fact, we're going to be going through public records next week, so we may be able to go ahead and pull that up as an example during the module. Let's see. I see another question's popped up. So Lee, hopefully that'll, if you go to your property assessor site, that'll take you there. Okay, I see Murray says that he's on the phone now. So let me see if I can pop you on. There you are.
Oh.
Murray, how are you doing?
Good.
Good deal, good deal. How are you doing today?
Very good. I sure would like to try that mic, but I was waiting there and I didn't know that you weren't hooked up with that, with the USB port.
Well, if you switch over to mic speakers, it might work, but I just didn't see where it was working at the time.
Well, because I changed computers and I went downstairs. The other computer's upstairs.
Ah, got it. Okay.
So I'm downstairs now on the phone.
Okay, well, at least we got you.
Yeah,
so,
good.
What question can I answer for you today?
Yeah, the question I had was, you pretty well answered everything there just listening to you. The question I had was on the transactional funding. How do we get paid there with the transactional funding? Is that, like you said, it was 1.75%, and if I want to say charge an additional point to make it 2.75, how is that handled?
That is correct. You can absolutely do that. You just add that as part of the fee agreement, and as long as you turn that in to the individual, there should be no problem with that.
Okay.
Or to the title company. As long as you disclose it, as long as you explain it right up front and include it as a fee agreement, then the title company will set that extra point for you.
Okay, very good.
No problem at all. Hopefully that answered it.
That answers my.
Excellent. Let's take a peek. There's a couple of questions that did come in. Okay. Okay, that was here was a question that was asked. I have some questions for the Q&A session. Do we receive a check directly from the client? That was in regards to the person that asked when you can receive an engagement fee or a fee for your services or for your marketing. I have the consulting template. I am trying to understand the procedure. When we submit a deal, we include the agreement, correct? Do we get paid from the closing? Do we receive a check directly from the client? And the answer again is depending on what stage in the process you're getting paid. And I went through an example just a moment ago, so hopefully that answered that question. What is a reasonable consulting fee for us to charge? And a great point that he just mentioned in the question. I'm new at this, and there may be an issue on the potential client's mind regarding credibility. To start off with, it may be something that you need to...
God damn it!
Okay, so... sorry about that. It hadn't been muted yet. Going back to the question, what is a reasonable consulting fee for us to charge? I'm new at this, and there may be an issue on the potential client's mind regarding credibility. And as I mentioned, the big point for me is I have testimonials. I have referrals that I can give people to show that I do close deals. So that is a very good point. And to start off with, you may need to charge a little bit less if need be, but at least you know what you can build yourself up to, which is where I am, and what I charge is about 10% of what the marketing raises. At what point can you charge the engagement fee, and what is reasonable for us to charge, especially starting out? How do you collect the fee? Credit card, merchant account, or PayPal? All of the above can be done. The most recent transaction that I did was in PayPal. However, just know that when you're dealing with merchant accounts, when you're dealing with PayPal and that sort of thing, you have to be cautious. I personally prefer getting paid the majority of my money through the closing, because that'll be a wire, or I prefer a wire, or at least a check, because that way there is a paper trail. It's something that I know can't be charged back very easily or anything like that. Another question they had, I had a reply to my Craigslist ad from someone seeking a business loan. Yes, it can be done. A business loan can absolutely be done. We are going to set up a form for business loans. And as you can see, we're growing into our skin with this program. And so we're setting up forms for real estate. We're going to also set up forms for business so that you can submit for both sides, and that'll be a better service for you. But the answer is yes. We have students, we have private lenders that are interested in business loans too, especially if they're attached to real estate. But even if they're not, there is definitely potential. But there has to answer the question, what's my security? And as long as you answer, what's my security, and then follow it up with what's my return, there should not be a problem. Always ask, though, especially on those business loans, what is collateral or security that can be provided to assist in the financing. You don't have to say it's a necessity, but find out what they do have or what they could put towards it. Okay. Here's a question. Actually, there's a few questions from a pretty seasoned investor, and this is the ones that they wanted me to try and go over. I've listened to both modules. If I speak to people that want to use the private money, the first thing they'll ask is how much or how many points, the rates and the terms. To do my first couple, what do I say to them? And the answer is most private lenders, it is a case-by-case basis. However, most private lenders themselves don't charge points. I'd say over 90% don't charge points. It's the brokers that do. You will be charging a marketing or a consulting fee or a processing, or if you do have a license, then you could charge a broker's fee. To do my first couple, what would I say to them is the question. You can charge as little as you want. You can charge 1 point. You can charge 1%, 2%, 5%. I will tell you that most what brokers do is they charge between 3 to 5% for private money, and then hard money lenders and such usually charge between 5 and 10%. So you could do as little as 3 to 5 without raising any eyebrows, and that'll definitely still get you a lot of business, and you'll still make a lot of money. Okay. Okay, and we did answer as to how to quote up front. How long does it take from the time I submit to the time a lender calls me? And is this right? They call me to discuss the deal. Yes, the answer is, again, to follow the process of how we submit a deal to a private lender and then how they get back to you is, number one, you send in the deal along with the contract and all the items that we discussed, the address, the value, along with supporting factors, the executive summary, along with exit strategy, the loan request, and pictures. All those things you're going to submit. And again, with the form that's going to make it a little easier for you to know not to forget these things, not to forget any of those things. But once you've submitted the deal and it answers all those questions, we're going to go ahead and submit it to the private lenders that lend in that area. Once the lenders start sending back requests, which usually will be pretty quickly, I'd say within 24 to 72 hours would be the time frame as far as people's private lenders saying, yes, I'm interested, tell me more. At that point, we're going to forward the contact. We're not going to negotiate any of the terms. We're not going to give them any more information. We're going to go ahead and send them straight to you. At that point, they're going to ask you additional questions about the deal. They're going to ask for whatever else they need for security purposes. And as long as all the questions are answered, they're going to go ahead and send you a term sheet, which will be all the items that that they need in order to send their money, and what terms they're going to request. What if they do charge points? What kind of interest? What kind of balloon payment, if there is one? What kind of actual payment? Will it be interest only? Will it be amortized? So on and so forth. So that entire process could be as short as a few days to as long as, I would say, 3 to 4 weeks. But keep in mind, especially with REOs and short sales and such, that's never a problem because it's usually within that time frame that the title company is going to require it to be closed, that the title company is going to require to do the process in the first place. Okay. By the way, I want to introduce someone. That is new to the team, but is not new to private money. I want to take a moment to introduce him to you. The gentleman's name is John Clough. John is going to be joining us on as part of the team to help in answering questions, in coaching through the process. He's going to be one of the ones that actually do the 911 deal reviews. He is a phenomenal real estate investor. He's very familiar with my strategies and with my systems of raising private money. He actually has helped me in projects and has actually been a coach for me for, I would say, over a year and a half. And we're really glad to have him on board right now. So if you'll give me a second, I'm going to add him to the call. John, are you there?
I'm here.
John, I've got our students on the line with the private money wholesaling system. And as I was introducing you, I was letting them know that we've been working for over a year and a half, 2 years with the Private Money Now system, and with finding private money using public records and doing deals and such, and that you are an accomplished real estate investor yourself, and have, I think, more years than I do actually in the business. But if you want to introduce yourself briefly, tell them a little bit about yourself and also how you can be reached for additional questions. Now, keep in mind, any questions that you have, any issues that you have for in regards to doing the deals, or in regards to the content, or any additional questions that you have, I need to make sure that you include, when you send an email, include a CC to me at privatemoneywholesaler@gmail.com and to support@dodeals.com. support@dodeals.com. That way, we make sure that we audit and keep on top of customer service to make sure that everybody gets their answers to their questions, and that we continue to give you the best customer service that we can. With that, John, you want to introduce yourself?
Yes, I do. Well, thank you, David. Ladies and gentlemen, I'm very happy to have an opportunity to work with you, and I'm very proud to work with David Day. What David Day has done has changed my whole outlook when it came to investing in real estate, and his Private Money Now system has been a wonderful, wonderful system in terms of being able to coach and teach other people as I've worked with people around the country. And I'm very, very delighted to be here, very delighted to have an opportunity to serve you also. As I said before, I'm very happy to have an opportunity to serve you, to help you with your questions, and to basically help you with your packages a little bit, whatever you need to do. And this is an exciting program, and it is very unique in the industry. I'm not aware of anything like it anywhere. And so you really are in David's ballpark here. And I'll say one thing, too, David, and that is that the thing I like about you is you've always been at least 6 months ahead of anybody else. And so I've always been appreciative of being in on the starting gate.
Only 6 months? Doggone, I'm losing my touch.
They're going to try to catch up, but by the time they do, we'll be that much further ahead. They're only
That's
beginning.
Right. We always want to strive to be on the cutting edge of real estate. That's absolutely true. Well, thank you, John, for your time.
Thank you, David, and thank you, everybody.
Okay. I wanted to introduce you guys to John because he's new to the team, and he's going to be a great asset in helping getting these deals done. Additional question that was asked. On single-family homes, do lenders charge points? Again, most do not. It's the brokers that do. If not, how many points is standard to charge for my service? Hard money is anywhere from 2 to 8 points, and actually up to 2 to 10. What about big apartment deals in the millions? Private money is hard to find, and I don't want to undercharge either. Okay, great question in regards to higher-end deals. When it comes to the higher-end deals, I want you to, and we'll have a form for that specific type of deal. Because in those occasions, it may take more than one private lender, or it may just take one private lender. Now, in those situations, there are specific ways of doing the higher end deals. We will, of course, be talking about the higher end deals when it comes to next week's module, which is getting access to money that's already working in your area. But for working with the Rolodex, it will be a case-by-case basis when it comes to the higher end deals, and they can definitely be done. But there is a specific format that will be used for that, and the process is that sometimes it takes bringing more than one private lender together for that deal. And so we will have to ask additional questions from these private lenders, such as, are you willing to work with others on that deal? Now, again, we have relationship and we're able to negotiate all sorts of things. But in those situations, it takes a little bit more to get those deals done. But they are completely doable. So we will have a process for that one. Send them through the real estate portal, which with this form it'll have a request or a way to point out if it's a single family, multifamily, commercial, industrial, medical, any type of investment real estate, but in the specifics you'll be able to give more detail, and we can actually work with you hand in hand to make sure that deal works. And in that situation, you may actually ask for me to assist in that process. If it's a big deal, especially right off the bat, you very well may want to ask for us to partner on the deal. That way we can assist in taking the reins, but it's entirely up to you. Question: can I assist realtors if they have clients that can't get approved from the banks that want a standard, conventional, or FHA loan? Yes, but it goes back to, and again, I don't say loan to value much, but in this case, I want to make sure you understand where I'm coming from. FHA, you're looking at 95-97% loan to value. Well, private lender's not going to do that. However, if, say, the seller is willing to carry back financing, if the potential borrower has a large down payment, yes, the bottom line is yes, you can work with realtors for clients that can't get approved from a bank, but just understand it's not going to be the same as a standard or an FHA loan. You still have to look at LTV. You still have to make sure you're answering the question, what's my security and what's my return? Okay. And the last question was, can we do this for my partner and myself? So yes, you can absolutely bring your own deals, and we're not charging ourselves for the deal, for access to the database, for access to the Rolodex. We're not actually charging for that. We're going to submit the deals. You go ahead, and if it's your deal, great. If it's somebody else's deal, that's fine. You can make money on the deal. But so you know, you can bring your own deals. There's no problem with that. Tom asks, what's John's last name? It's Cluff, C-L-U-F-F. Okay, what happened? Okay, great question from Art. Art, are you available? Let me see if I can open the line. Art, I see you raised your hand and you got your question in hand. You're on mic and speaker. I'll try and unmute you, and if you are available, great. If not, I will have to I'll have to go ahead and read it for you. Are you there? Hello? Looks like I will have to read it for you. If you don't have full clarification, Art, go ahead and switch to telephone and call in the number. If you look in the audio section of your dashboard with GoToWebinar, there's an option to go mic and speakers or telephone. If you switch to telephone, it'll give you a phone number along with an audio pin, and then I'll be able to hear you, and you'll be able to ask questions yourself. But in the meantime, let me go ahead and read it to you. What happens if a borrower stops paying? Is there any charge back to us, the private money wholesaler? The answer is no. Okay? If you are the one that brought the deal and such, no, you are not signing the note unless it's your deal, of course, unless you're the one pledging to buy the property and borrow the money. So it is the person who is requesting the money that gets qualified. It's also the person who is requesting the money that has to pay it. You are not responsible for repaying the loan. However, I will tell you this, as a real estate investor, this is one of my strategies for getting deals. This is definitely one of my strategies for getting deals. I get with the private lenders, find out if any of them have defaulted properties. I also, if one of the people that I brought to the table do default, I request to take a look at the deal, and I ask myself the question every time that I look at a new deal for a private lender. I ask the question, would I be willing to take this property back, as if I'm in the private lender's shoes? Would I be willing to take this property over? And the answer should be yes, or else I shouldn't be doing it anyways. But when I do look at the property, I've already said yes. So I'm willing, and I say this to the private lenders because I'm also a real estate investor. I say, hey, God forbid the person defaults on the loan, whether it's because he did bad or whether he just, bad thing happens to a good person, I would be happy to stand behind the deal. And by the way, that's one of my selling points with the private lenders when making first contact. I work with a group of people that we've been doing private money wholesaling for quite a while, and knock on wood, no complaints yet, because we look at the deal first as if it's our own money and ask ourselves that question, would I be willing to take this property back for the loan amount? And as a result, since the answer is yes, we're more than happy to stand behind the deal. Now, I say this to the people, to the private lenders. This gives them added security, added benefits in saying that they know that I would be willing to take the property for that loan amount, and as a result, they're more than happy to do the deals. And in the situations where the deals do go bad and the person defaults on the loan, I am happy to take the property over. And so I do stand behind it. That being said, no, you don't have to, but it can be a great credibility builder if you do. Okay. Judy asked, someone asked, what is a reasonable fee to charge? You said 10% of marketing rate. What I mean by that, because she asked, I'm not sure what that means. What I mean is, if that deal, if my marketing raises $300,000, I collect 10% of what that marketing raises. So I would collect $30,000, less the $5,000 or whatever my engagement fee was. So I'd collect probably $25,000 in that situation. So what I charge, because I've got all the credibility behind me and I've got the testimonials and so on and so forth, I'm able to charge 10% of whatever the marketing raises, and so that's pretty decent size, as you can imagine. But it's not necessary to charge that much. But that is the clarification of what I'm charging. So let's see if there are any other questions? I think we actually answered all of the questions that are in here, and I hope that we've answered everything that you had questions about. If you have additional questions, by all means, put them on the module next to Module 2, and we'll be happy to continue to answer them. But again, we've been at it for about an hour and 45 minutes or so. So I'm going to go through my usual casting call, which is to see if anybody has any additional questions. Going once, going twice. I think we're sold for the moment. All right, well, thank you, everyone. Thank you for your time. Thank you for spending time with us on this Q&A. It should be rendered and it should be up for review in the next little while. Hopefully within the next few hours, but sometimes as much as 24 hours. But if you will review it, and if you have additional questions, if you'll get back to me, I'll be more than happy to answer them. And we'll see you next week when we talk about how to find all the money that you'll need in your area as well. So till then, thank you, everyone, and we will see you next week.